The market chops to start the holiday week, and I get shadowjacked. This is Invest with Jacob. Okay, guys, so in last week's video, we talked about a downside setup that the bears had. They failed to take it. The market pushed back to all-time highs before coming back down into range and basically chopping into today. So now the question is, who has control of the market? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, I do have to address something pretty serious. I got shadowjacked. I put up a video last week, and the market failed to take my downside setup, and Shadowjacker came out with five comments on one video. Now, I agree that I missed the call, but 5 comments is a little emotional, buddy. And what I tell my room is, emotions are for dating, not for trading. Although, if you're making 5 comments on a YouTube video, you're probably not doing much dating and maybe a little more shadowjacking. And what kind of name is that, by the way? I realize you need a fake moniker because if any of your friends and family knew what you were doing online, well, let me backtrack that. There's no friends, at least not any you would tell about this. Could you imagine like going to a party and be like, I got that YouTuber dude, 5 comments on one video, he'll never recover. Like, pretty good. You got me. Sick burn, bro. But Shadowjacker? I'm sure that hits hard at the NAMBLA conventions, but it's a little creepy up front. So, sick burn, bro. Good work. Now, let's jump into the chart and take a look. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500. And last week, I gave you 2 key levels. I gave you 55.20 and 55.60. We were looking for downside to break 55.20 and go, and they were unable to do so. And they went up and broke 55.60. And I told you if they broke 55.60, we were likely headed to all-time highs. And that's exactly what happened. The ES came up just a little short of its all-time high, but SPX and SPY both made new all-time highs. And then we sold off from there back into the range where we started. So nothing of note really happened over the last few days, except for we got to push up, a look above and fail, we call it, where it goes above the range, comes back down into the range, and comes to the bottom before starting back trading in range again until we get our next breakout. Now, the move down does have a 5-wave structure, so that is a plus for the bears, but we are above support, and until support breaks, this market is bullish. I'll say it again, and I'll say it again. So we are looking for the potential for this to be our 5-wave move down. Bit of a bounce. This week is notoriously bullish. This July 4th week, it's a holiday week. Holiday trading is usually lower volume, drift higher type trading. So we would look for traditionally a move up, and that would coincide with the pattern we have here, looking for an ABC bounce into the 55.44 to 55.66 area. To be honest, I would want to stay under that 55.60 area. That is the high end of the range that we've been trading in, and we would want to see that hold resistance. Above that 55.54 area, the bears should be very cautious and be looking for another move to the all-time highs in the 56.03 to 56.30 area. That would be our next move to the upside and our next target. So overall, nothing of note happened. One thing I do want to note, one thing I do want to note is that we did not make an all-time high here, but we did on the SPX and the SPY, and I've moved the top over to this peak, and the reason for that is this is an after-hours high, and anytime we have an all-time high that happens during the cash market hours, we defer to that high. So we would defer to the SPX high, so we do start our count from here. But even so, I mean, you can still count it as a 1-2 setup. You still have a wave 1 and a wave 2, and then, you know, you'd be looking for a breakdown like that. So it doesn't change things a whole lot, just changes your starting point, because of the cash market high, which we default to in situations where SPX and SPY make a high, but ES doesn't. So that's why we have the peak over here. Overall, though, still looking for a topping formation and a breakdown below support. Over on the NASDAQ, okay, on the NASDAQ, we have a same type of setup. It did not make a new high on the NQ, but it did come up toward the all-time highs, and it did make a new high on the NDX and the Qs. So we defer to this cash market high as opposed to this after-hours high. Just to change our count a little bit in the futures market. So there's always a little bit of adjustment to the futures market because it does trade after hours and it has contract rolls and things like that. So that is something just to keep an eye on. But off of this high, another solid 5-wave move down, looking for a 3-wave move back up into the 20,041 to 2163 area, with really the 20,095 area being the area we want to watch. That was the resistance area of the range that they broke out of. And if they get back above that, we would expect them to continue. So keeping an eye on that 20,095, 20,100 area as a resistance zone and for the bulls to push down. But again, this is a notoriously bullish week. So I would not be super confident or be looking for a big, strong move down this week in almost all cases. That doesn't mean they can't do it. That doesn't mean they won't do it. It means traditionally, this week of the year with July 4th and the holiday is a low volume drift up type of trading, and you don't tend to see huge moves to the downside happen. So I wouldn't be holding my breath for a breakdown this week, but if they are able to come down and break the low, we would look for them to start selling fairly strongly in a continuation of the move down. So we do have a potential 1 and then a bounce here in 2 setup. And if they are able to come down and break this low down here at 19,827, we don't have a pivot yet because we haven't established a top in wave 2. But if we were going to put a pivot in based on today's top, you would have basically the 19,716 area. You would want to see them break through that, which is essentially this low right here, which, funny how Elliott Wave always seems to line those up. Come down, break that low. That should ignite the selling if they can break that low. Now, if they don't break the low, guys, the trigger never happens and there's nothing to look for to the downside. You need to break the low. It's a setup for a move down, but it doesn't mean the move down is coming. It means that we're looking for this key level to break, and if it does, look out below. And we're looking for this key level up top to break, and if it does, look out for new all-time highs. That's how key levels work, and that's how trading works. So hopefully you can start to understand how these key levels help us trade, both short and long, and how to trade off of them, and what happens when they break and what happens when they hold. It's a very clear, easy way to do it. So that's how we use the key levels. The key levels again on the NASDAQ, 20,095, 2,100, 20,100 area, and the 19,716 area to the downside. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there, make sure you love it, become part of the training team, interact with PT and I, and make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material, our Elliott Wave for Beginners online course, and our advanced Elliott Wave course. These courses are helping traders understand this complex market. In our advanced Elliott Wave course, we go over the very complex patterns that you don't see very often in the market, but we have seen more often lately because we're in corrective structures. And that would be like your advanced fib levels, your diagonals, your double and triple threes, your flats, all of those types of patterns. They're very difficult to kind of understand. It tells you how to find them on the chart, what their targets are, what their levels are, what the key levels are. That's the most important thing in trading, guys, is the key levels, and it gives you all of that. Now, as you can see on the screen, our traders are loving this stuff. It is helping them make money, but if this is too complex for you or you're getting started in Elliott Wave, we do have our Elliott Wave for Beginners online course. This course is helping real traders make real money and understand the market in a way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up. And that's because the news cycles didn't matter, and Elliott knew that long ago. He knew that the key levels mattered and what happened when those key levels held and what happened when they broke. And this gives you a huge trading advantage over the rest of the market. Now, this course is 25 videos where I go over your introduction, where we go over the expectations, your mindset, the KISS method, and why this works. The chart setup, each tool we need to use along with Elliott Wave, how we use it and why. The Elliott Wave for Beginners area, where I go through each of the wave parameters, as well as the theory of alternation, corrective depth theory, zigzags, all the stuff you need to know to understand this complex market in a way that makes sense. Now, the cool thing is if you want to get these 2 plans together and get them at a discount, you can get our bundle and get $37 off. Or if you want to get them for free and not pay anything at all, just join one of our monthly rooms, as they are included in both rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing in day trades. We do trade quite often in my room. If you are looking for advanced trading, income trading, futures trading, or individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as that futures trading, that individual stocks, his income trading that's crushing the market, and his advanced trading where he uses his reduced risk binary method that absolutely crushes it, gets you in at a cheap price, get you big multiples on your money. And it's something you kind of have to see to understand, which is why we have that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, the key takeaways for today. We have our parameters. They do have a setup to the downside. This is a bullish week, so you have kind of counter trending there. The 5560 area above is still the key level. The 5520 area, really the lows, but 5520 is the level to break. Assuming they can do that, we would look for acceleration to the downside. Over on the NASDAQ, our key levels are the 20,100 area, as well as the 19,716 area to the downside. If they can break out or below one of those levels, we would look for acceleration in that direction. Guys, that is your market update for today. I'll talk to you tomorrow.